Hello there. It's my dubious task to convince you that the economy is doing all right. You wouldn't believe that if you look at all the newspaper reports. Um, a friend of mine told me the other day, he said, Doc, a recession is worse than a divorce because you also lose half your fortune, but you're still married, which is a bit cynical, of course. Now, what I want to present you with here today is clear and visible and quantifiable signs of a V-shaped recovery. This recovery is happening so fast it can make your head spin. But the fact of the matter is that some sectors will take a little bit longer. So let's go through some of these slides in terms of some themes, and just to demonstrate that I'm not oblivious of the fact that there was capital market mayhem. By the way, this slide, the background to this slide is the Zimbabwean economy. We're not quite there yet. There was a lovely little piece in that movie Out of Africa when this lady went back to Scandinavia. There was a scene at a subway where somebody had scribbled on the wall, I had a farm in Africa, and somebody else scribbled underneath, you're lucky, I still have mine. But that depends, of course, where your farm is. So what happened, of course, in the early stages of this pandemic is that our bond yield almost went through the roof. Now, of course, you will realize that if your bond yield increases, if a country's bond yield increases, it means that the value, if it increases, the value of your bonds are declining. So what I want you to spot here is that as this bond yield came down again, which I predicted a 300 basis point decline within 4 months, and I got that one right. I don't always get it right, but when I do, I try to tell as many people as possible. But if you calculate the reciprocal of this slide, the value of our bonds, you will see a clear V. And that is the golden thread running through most of my slides, especially the latter part, is that we are in the midst of a V-shaped recovery. And you should start preparing for growth as far as I'm concerned. You can also see it with the exchange rate. Now, depending on your time series on the horizontal axis, if you calculate the value of a rand, this one, of course, is the value of a dollar. This is not the value of a rand. Then you will also see a V-shaped recovery. The rand has strengthened since its low on the 24th of April, a blue Monday, like Garfield has never seen before. The rand has strengthened by 14%. And I can tell you the cynics never saw that coming. This is a V that I don't like, and it's got nothing to do with the recovery. It's our debt GDP ratio, which is increasing. Now, if we compare ourselves to our peers and our major trading partners, we're not doing too badly. And if there are any observant people looking at this, they will tell me this is pre-COVID because now it's heading towards 80%. The point is that you can add between 10 and 20 percentage points to the public debt GDP ratios of every country in the world, more or less. This is not a South African problem. This is a universal problem. And the secret, of course, to solving this problem is if you look at the formula, GDP is the denominator. Get the economy growing, create jobs, broaden the tax base, and this problem will sort itself out. And that's what President Ramaphosa wants to do. Unlike his predecessor, who did exactly the opposite. Anyway, our public debt servicing costs is not out of sync with our peers or our major trading partners. One issue which I think we're all aware of is that what this pandemic has done, it has changed people's attitudes towards spending and towards economic interaction, which means essentially that some sectors have done spectacularly well. Internet communication, courier services, etc. Whilst others will take quite a while to recover, especially commercial aviation, hospitality, etc. But they will recover eventually. In the meantime, you have leading sectors, you have lagging sectors, and it's important within your own supply chain to be aware of some of these blockages that could happen. And just to demonstrate that, Uber is a fairly well-known global company. They had a 75% decline in the second quarter of this year compared to on a year-on-year basis. 75% decline. That means that you're doing a quarter of what you used to do in their rides. But their eats has doubled. And the eats is now twice what the rides was. It used to be a quarter of that. There will be a retraction of this as we go ahead. I can't see the eats declining by much in future. That will keep on growing. But the rides will come back into the equation. Once more, evidence that new subsectors have come to the fore. They've been They've actually been thrust to the fore, and they will continue growing as a result of changing consumer behavior. You can also see that in the revenues of global tech companies. All of these companies are known to us. They would not have experienced this type of revenue growth if it hadn't been for COVID. We must bear in mind, of course, that these graphs are one-dimensional. They do remind me of the definition of a statistician. That is a person that will tell you if your feet are in the oven and your head is in the freezer, you are quite comfortable. But please don't try that. Agriculture. Let's have a snapshot on agriculture, which is close to your hearts. The average value added of agriculture the last couple of years was about 100 billion rand, 2.5% of GDP roughly. And one previous agriculture minister actually made a remark one day. She said that this sector is so small, they use so much water, as if this is insignificant. Now, I've got news for this lady. If you take that 100 billion through the whole supply chain in terms of turnover, not value added, turnover, then you get to a figure of almost 2 trillion rand. The supply chain starts with primary agricultural production. Food security is paramount. There's no substitute for food, so don't mess with this sector. That's my message to government. And the sector is incredibly productive. Despite a consistent decline in its fixed capital stock as a percentage of the total for the economy, its contribution to GDP has remained fairly constant, a clear sign of productivity growth, as opposed, of course, to the concept of productivity in the public sector. The Minister of Home Affairs, when he was still Minister, Malusi Gigaba, he was once asked by an international delegation that was very, they were quite impressed by that beautiful building in Pretoria, granite-clad, 15 lifts, I think, dozens of scores of people running around. They asked him how many people work here, and he thought for a while. He said about half of them, but I think he was exaggerating, as he's wont to do. Increased productivity. You see this with virtually every crop, every product. Here you have for maize, despite a decline in the area planted. Avos, bananas, you see that with sugarcane. You see that, our orange exports, our oranges are in high demand. I believe the farmers in Mozambique and some of our farmers are very interested. There's a river somewhere, and the area is very suited for oranges. Americans are apparently putting some money in there. I think that's good news for the whole region. Just look at this one. Top 10 export categories, first quarter 2020. Agriculture and food came in second, above gold, above platinum, above coal, and above iron ore. But I've got a more interesting slide as we go along. Just look at this export performance from agriculture. It is stupendous. And the bulk of these exports go into sub-Saharan Africa. I've got no doubt in my mind that some African leaders in the subcontinent have whispered in President Ramaphosa's ear, don't mess with agriculture. Don't go the Zimbabwe route, because we are going to have serious problems with food security. And I trust that they get that message, the standing committee that has to decide on expropriation without comprehension. That's my take on it, by the way. So what's happening to the global economies? I never thought I'd be pleased to see the oil price increase, but I don't mind this one bit, because there's another V. It shows you the world economy is growing. And if I'd gone to the trouble to include March's PMI data, that's the Purchasing Managers Index, composite, in other words, services plus manufacturing, then you would have had a V for every single one of these countries. But the slide would have become a little bit busy. So there's another 6 Vs. And except for Japan, all of these countries are back to 50 or above, which is the dividing line between economic expansion and contraction. This is excellent news. These are our trading partners. There's the most pronounced V, I think, that I could find. The Chinese PMI, a clear sign of a V. And if I'd gone to the trouble of including 2019's actual GDP data on this slide, there would have been another 7 Vs. Never in the history of the IMF has there been such a large spread between 1 year's growth forecast and the next year. And we should start focusing on those brown bars, because the growth is on its way. Make no mistake about that. By the way, the definition of an economist, it's somebody who will marry Charlize Theron, but for her money. which is probably not a bad idea depending on the mood she's in. Okay, so let's have a look at South Africa's perspective. Just a bit of a mix of slides here. I want us to just remember what our economy was like before COVID. And if you take short-term insurance, which is always a good proxy for what's happening in the economy, if people cannot afford their insurance premiums, then they are not buying assets. Now, you can clearly see from this slide that there's a long-term upward trend, bit of volatility from time to time, maybe as a result of a drought or the April festive season. I think it's a brilliant idea to introduce a 0% alcohol level for drivers. I think that's really a good idea, quite frankly. This country, on average, the average household spends double the amount of money on alcohol than on education. That is frightening. Anyway, but cold beer after a soccer match, not necessarily a bad idea, but don't drive afterwards. Long-term insurance, exactly the same thing. Obviously more volatile because you do have periods of low confidence where the surrenders increase unnaturally. But once again, two very important industries that serve as proxies for the economy, and they were both heading upwards when this hit us. Now, this is a brand new slide. The data was released, I believe, this morning. Two of my previous jobs were financial editor of a daily newspaper, and also I found the management accountant with a bakery firm. And I learned two important lessons in those jobs. People do not like stale news, and they don't like stale bread. And I'm not giving you stale data. You will spot some September data, and it's very early in the month. So just look at this export gap between export and imports. Our cumulative trade balance is just below 100 billion rand. And agriculture has a lot to do with that. I'll get to that in a minute. The rand. I'm trying to preempt some questions here. What is the rand going to do? We've seen earlier that the rand recovered quite nicely. It's undervalued to the tune of about 24% now in terms of its long-term average real effective rate. On this slide measures the blue line, the value of a rand, not the value of a dollar. The rand against its major currencies, trading currencies. And it was on its way to overvalued territory after President Ramaphosa's election, when the trade war and the coronavirus hit us. And I can comfortably predict, as I did in 2016 and as I did in 2002, that the rand is headed for a period of strength over the next couple of years. But there will be a lot of volatility. And this is a big if President Ramaphosa and Tito Mboweni, and to some extent also Ibrahim Patel, watch that space. They are doing great stuff at DTIC. They've just introduced an export barrier monitoring mechanism where they guarantee within 24 hours to answer any exporter's query, and within 3 days to have acted on that query. Any query, non-tariff trade barriers, tariff barriers, etc. So we are slowly but surely moving in the right direction. Right. So the rand is undervalued. So why would you want to take your money out of the country? Not a very good idea, unless you want to immigrate. And then you're going to miss out on a lot of opportunities and a lot of stuff to fix. There's always something to fix in South Africa. One of the reasons why we are recovering so fast is the fact that services are now almost 70% of GDP in this country, 80% in the US. So that makes it easier to recover from a pandemic like this one. But I'm not naive. Household disposable income in 2020 will decline, but by not probably much more than 4% in nominal terms. And next year, we should have nominal growth of at least 6 to 8% in household disposable income. Companies that do not prepare for that are going to lose market share. I've got no doubt about that. We have the first current account surplus on our balance of payments in 17 years. Well done. Also to agriculture, and to an increase, another V, in the ratio of foreign income receipts to income payments. This tells you that we have fundamental balance of payment stability in South Africa as we speak. And as far as our first quarter GDP is concerned, Stats SA tells us we were in a recession in the first quarter. We will go in a recession in the second quarter, and we'll get the data next week on the 8th of September. We'll know what the extent of that decline was, it's going to be enormous. But that's in the past now. We are now in the third quarter, and we are heading for a bumper fourth quarter in this year. So we must just try to remember that. What irritates me is if Stats SA tells us we're in a recession when we're not in a recession, because in the first quarter, if you calculate our gross national product, it increased year on year in real terms after deflating it by the CPI by 3.6% year on year. So I'm going to have to pay them a visit with some of my statistician associates shortly. Mineral sales at current prices, there's another V. Incredible stuff. Somebody told me recently that it seems as if there are many PhDs in the Command Council and Parliament, etc. And I was quite amazed by this. I wasn't aware of that. And he said, yes, that it stands for past high school with difficulty. In any event, mineral sales at current prices, another V, brilliant recovery. And in the first 6 months of this year, the total value of mineral sales produced in South Africa was just short of the all-time record of 268 billion rand. Really well done. Retail sales, V-shaped recovery. And if you isolate general dealers, which make up almost 50%, and the survey data on general dealers, much more reliable than the rest, because the rest includes a plethora of very, very small retailers, and very few of them actually submit their surveys to Stats SA. By the way, the sample size is shockingly small. So general dealers is actually a better proxy. And what happened in June? 2% higher than June 2019. So please don't tell me that we are not experiencing a V-shaped recovery. The proof is everywhere. There's another one, the JSE. A cynic will tell you that you can make a small fortune on the JSE by starting with a big one, but that's simply not true. If you had bought, for instance, Sasol shares when they were at 30, you would be able to retire today, depending on how much you bought, of course. And that company will recover further. And this is not a V, but this is a beautiful slide, because our interest rates are low. It's not good news for people with a lot of money in money market accounts, but that's not a very good idea for starters. You need to have a balanced portfolio. If I were to win the lotto tomorrow, I do three things. I'd buy myself a Ford Mustang V8, which I've desired for my entire life, more or less. I'd put something aside for a good divorce lawyer. And then the rest of the money I'd give to the Optimum investment group, because they know what to do with my pension fund. And that is a balanced portfolio. The good news about the lower interest rate is that a high interest rate acts like a tax on venture capital. What an emerging market like South Africa needs is for companies and individuals to invest in their own businesses and to invest in riskier avenues where you can create a lot more jobs. If your interest rate is too high, it encourages passive investment. With inflation as low as it is, it means essentially, by the way, this is not a V. It means that we can look forward to an extended period of low interest rates, which is good news, because lending rates and durable and non-durable consumption, durable and semi-durable consumption are inversely correlated. I've used new vehicles as a proxy. That's a predictable inverse correlation. And we ran a econometric model, Prof. Ilse Botha from UJ, no relation of mine, no nepotism here, at UJ, to find out what would South Africa's GDP have been today if the real prime rate, that's now prime minus CPI, had stayed at 3%, as it was during Jill Marcus's term of office. But unfortunately, she retired in 2015. And then the new Monetary Policy Committee, who were all appointed by Jacob Zuma, they decided to take the prime rate ultimately to 6%, the real prime rate, and an average of 5.3%. And the model told us that our GDP would have been 560 billion rand higher today if the real prime rate had stayed at 3%. Important message here for the Reserve Bank. This is, I believe, my second last slide, and a beauty. Hot off the press. That data was released today, to the best of my knowledge, the August Purchasing Managers Index for Manufacturing. And as you can see, there's almost a double V here. We didn't take a hell of a knock in April, and it's above the 50 line, so there is expansion there. It was in negative territory, contraction territory for 9 months. And then from May onwards, it's been in positive territory. It's at its highest level. This PMI is at its highest level in 13 years. 13 years. This is a sign of confidence in the economy. And here you have V's. If you were to include 2019's actual data, you would have a V for every one of these forecasts of growth for this year and for next year. Now, this year is looking really bad. But that's solely because of the second quarter, and the second quarter is mainly because of April. If you shut your economy, you're going to have a recession. I mean, no rocket science required here. We should start focusing on the green bars. The green bars tell us, and the consensus amongst the 38 economists that participate in this Fin Media Economist of the Year award, which I have won in the past, is that we will have real growth next year of 3.1% and probably gross national product growth of more than 4%. I'll take bets on that one, the 4% GNP growth. And we must really start preparing for growth. And that's my message. My message to you is that President Ramaphosa, after this pandemic has passed, and a core team of his, are slowly but surely going to start implementing National Treasury's new growth plan, which is essentially the NDP, the National Development Plan Light. It's a brilliant document. And if COSATU doesn't like the labor market reform, which I hope and trust and believe will happen, then the government should ditch them, because nowhere is it written that the tripartite alliance should last forever. The SA Communist Party are welcome to try to fight an election on their own. The definition of a communist, by the way, is somebody who's got nothing, but he wants to share it with you. Government doesn't need those albatrosses around their neck. And I think Mr. President Ramaphosa realizes this. Venezuela and Zimbabwe did not become failed states, dumped in chaos and poverty because of a lack of opportunity or resources. They became failed states because of the wrong policies. We, for a decade, have not had any type of sensible economic policy in this country, thanks to our previous president. Now we have a smart president, and he's assembling a smart team around him with maximum private sector involvement. This country can go places in the next couple of years. We must just be a little bit patient. Thank you.